You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around these parts, the option block. A little bit of unusual activity, a whole bunch of what's trading, a dash of strategery, and then, of course, a whole bunch of your questions, and mix it all together with a little taste, a little pinch of what's coming down the pike in the future, and you have, hopefully, the delicious stew that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to sink your teeth into these days, including many great archived episodes of this fine program and all the others on the old network, Volviews, Advisors, Options Bootcamp, all that fun stuff. Easiest place to find it all, of course, the mothership, theoptionsinsider.com. While you're there, click around a little bit. Maybe you read some great stories. They launched that new Tesla tracker today, getting a lot of interest in that. We'll get to that in a little bit as well. You can find all that good stuff, of course, in Mothership. Or if you want to mainline the radio, iTunes, TuneIn, Stitcher, our mobile app available for all the big stores. And if you're super hardcore, we love you guys as well. You can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, M-I-X-L-R. We get to see how the sausage is made, get to get it live in your ear holes. Don't have to wait till the next morning for the lovely edited podcast version to come out. So for you hardcores, Mixlr, grab the link over there on Twitter or Facebook or however you follow us on the website and follow along. And however you listen live after the fact, hit us up. Questions, comments, insights, slams on the Rock Lobster. We welcome them all. You guys know how to do it. And let's get started. Speaking of welcoming, let's welcome on my cohorts. It feels like it's been a little while, even though it hasn't been that long. It feels like it's been ages since we've done the old option blocks. Let's go around the horn, starting out in the lovely tropical locale known as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program to you. Does it feel like same to you like it's been forever since we've done this?
Yeah, it kind of does. I guess it's because we didn't do it on Monday. That's probably the reason for that. But it's great to be back.
Curse those long holiday weekends. And I want to be in here option blocking 24/7. There's no breaks for the wicked here on the network. Of course, we did have a day off. Can't blame us, listeners. The markets were closed. It was not our fault. Send all your hate mail to the Rock Lobster. And let's welcome him on now before he gets more umbrage. The Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, beaming in from the hinterlands out there of Maine. Mr. Rock Lobster, welcome back to the program. Same question for you. Does it feel like it's been about 10 years since we've done this?
It does feel a while. You missed 2 sessions, and all of a sudden all umbrage is directed toward you. All I can say for our guest host is you better watch out.
Better watch out. Indeed, that's right. You got usurped on the last show, too, by the Meatball, I believe. So, yeah, it's been even longer for you. I'm surprised you remember how this works. Do you know where your mute button is? Can you find it? That's a big question for you, I know, every week. So we'll see. We'll see if the Rock Lobster can handle it. Speaking of special guests, also joining us, also from that hinterlandy area of the upper Northeast, a.k.a. New Hampshire this time. So Maine adjacent. We are joined by none other than Mr. Matt Amberson, the founder over there at ORATS. Matt, welcome to the Option Block program, sir.
Thank you very much. We've got the upper right coast settled up here.
Yeah, you guys got it locked.
Go.
We need like someone in the Southwest to balance you guys out. Otherwise, the country is just going to tip off the mat there. Obviously, the map. Matt, obviously, you and I chatted down at OIC a few weeks ago. So for our listeners, if you didn't hear my full conversation with Matt and what he does over there at ORATS, some really cool back testing stuff. Check it out. You can find it in our network feed or just search for the conference feed over there as well, and you can find it. But Matt, really quickly, for those listeners of the Option Block here who didn't hear that conversation, give us a quick overview of your background, what the heck it is you guys do over there at ORATS.
My background, I stood behind and cut my teeth with Andrew on the floor, literally right behind him. I practiced my art on his jacket. And
we were young then.
Yeah, we were young then. And I rolled up into ORATS. We have proprietary volatility calculations that now we're using a lot for advisors, funds, pensions, doing a lot of back testing, as you mentioned, looking at option environments, what's the best trade to do in particular environments, systematizing people's trading, that type of stuff.
There you go. Check it out over there at ORATS. That's ORATS. You can search for that or follow them over there on the old Twitters. And you too can stay up with what all the cool stuff they're doing over there in the realm of back. We're talking a lot of back testing on the show lately, so that's definitely all the rage. Check out what Matt and his team are working on. Meanwhile, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the program where we break down what was going on, what was catching our eye in today's market activity. Bit of an interesting one if you're one of these ones who was pulling for a bit of a pullback out there on the old street. Well, you didn't get your wish yet again today. You've been very frustrated of late, and once again, your frustration continues. Mostly green on the screen. The S&P, the leader of the charge today, up about 0.75 or very close to it of 1% or so. The Dow hot on its heels, about 0.6%, and the Q's ever the laggard today, up less than 0.5%. And all that green on the screen means VIX cash, yes, back into the single digits realm. So we got as low as 991, closed right around 992. So closing right there on the lows. So yeah, all you people who thought maybe the Trump scandal was the shot in the arm that the VIX needed to come back to life. Well, we saw last week it spiked up and then completely came down the other side over the course of last week, continued to erode all week long. And if today is any indication, it's going to be continuing to erode for the rest of the week as well. So it doesn't appear to be any hope, at least for the next couple of sessions, for some vol love out there. Let's start. Where should we start today? Let's go back around the order we went before. Let's start with Uncle Mike. Uncle Mike, what caught your eye out here in today's sea of green on the screen, sir?
Well, first things first, never before in the history of the entire stock market has there ever been a better time to sell
to buy puts
than today.
To trade iron condor swaps?
Well, of course, there you go. With markets today, commodities were relatively flat, and in terms of the sectors, we have a lot of things going on today. We had news from Ford saying that things looked a little bit better for them than they had originally anticipated. Tomorrow we have the unemployment report coming out, or non-farm payrolls, just looking through the sectors on the day, the big winner on the day was financials. XLF is up over 1% on the day. A couple other ones did pretty well too, but with financials dominating the market with the sheer size of what they have on there, I think that was a big driver of markets today. Also, energy was relatively flat on the day, which is, I can't say that I'm really shocked by that with the relatively flat day in commodities. Just some other things of note around the marketplace, of things with which I follow. The fruit company, Apple, up 20 pennies on the day. Nothing crazy there. Excited to hear what Andrew has to say about the VIX here in a minute. We are back in single digits, of course, and had some interesting moves in the last couple days on my SPY strategy. So allow me to put the hook in now for the strategy block.
Your SPY, so you're teasing SPY this time, not SLV.
I know I can deliver with more moves on SPY than I can on SLV.
Probably a safer bet on that one. Yeah, the 2-year collar in SLV hasn't delivered so far. I mean, it's delivered from a returns perspective, but from our selfish content perspective, not so much. Has not been the bonanza we perhaps first envisioned when it was set up. 2 years in silver. Who knew? All right, moving on to the other side of the country. That upper northeastern quadrant, zeroing in on Maine. Mr. Rock Lobster, I'd imagine your Eye of Sauron was drawn inexorably to that VIX on the screen. What do you think we're back in? It's actually about 990 actually is where we ended up around today. So what caught your eye in today's activity? I'm guessing that ever-eroding, ever-elusive VIX was once again center of attention for you.
Actually, yes, it was, but also... Now, I know this sounds... Did you remember when Comey said Trump told him to lay off Flynn? What did that do to the VIX? And then he got fired. VIX went from, 10 to 16? And Mr. Comey is going to testify on the 8th. That's what they announced. And volatility got totally crushed today. Like it doesn't matter. So anyway, we looked at some trades in here. And just some of our other guys that look at skew a lot. Skew is at an extreme. Just I think the at-the-money vol is so low, so that out-of-the-money stuff is very expensive. We are trading 2430 SPX. So I would say today's action is a skew stretcher, meaning the vol is going down because we're climbing up the curve, yet they don't want those the vol and those puts are just not going away because we still have the testimony. So you have kind of a separation where the curve steepens, and because the traders are just not letting that vol drop. They are not letting the curve stay where it is. So it's kind of a strange phenomenon if you're in the SPX. And when you were young and you actually got twisted around a tree on that the first time you experienced it, you still remember what it feels like. My puts don't go down. This is so annoying. But anyway, that's, I think, similar action to what we have. And we laugh. Trump as a single-digit president, yet he pulls out of the Paris Accord, and he is a single-digit president at least. Some 100+ days into his administration. So right now, I think that good payroll number, the ADP number came out. I kind of like that one. But again, we're not getting a smorgasbord of movement in the SPX. We basically have a couple days it doesn't do much, and then it goes up. And then a couple days it doesn't do much, and it goes up. That's a recipe just to destroy volatility in the index. It's just the way the thing works. And we're now sitting at multi-year lows. And it should be at multi-year lows because of how the product's trading. There's no reason for the vol to be higher. So there's opportunity in different ways. I think we covered that a bit in our chat room. And the financials also, the market seems to be like the financials when it kind of breathes, it exhales, and everybody's not pounding the crap out of them for any particular reason. So I think those are all contributors to vol coming in. And here we are. It's a little collection of things, and no strange treats out of Trump. And is it hard to say that? No strange tweets out of Trump.
Easy for you to say. Easy for you to say. I think it gives you a greater appreciation for having to talk for a living here. It's a challenge. But, you're right. You mentioned, we touched on that phenomenon you mentioned of the VIX, of the futures, kind of people not really wanting to crush them down to that level. On vol views a little bit last week is this weird phenomenon where, we're in this ever-eroding VIX cash era in the single digits, and yet the futures remain well north of that. You're seeing 2-3 points, premiums in the front month and 2 months out, which is, an incredible steepening. And yet there's a certain point, just this far, no farther, they won't really crush those beyond that level. So you get this odd moment, and the data backs it up. If you look at it, whenever VIX gets this low, it's where you get that front portion of the curve is just super, super steep. And it may seem counterintuitive to a lot of people, but go look at the futures chart for yourself, and you can see what they got going on. Speaking of what's going on, let's bring on our guest co-host. We're giving him enough time to ruminate here. Matt, what's been catching your eye in this sea of activity, or perhaps lack thereof, these days?
Yeah, what I've been looking at is the component volatilities versus the indexes or ETFs. So since Trump has been in office, there has been a dichotomy between stocks going up, stocks going down. Now, in a healthy market, you have benefits from diversity or diversifying. And so when you have some stocks going way up, some stocks going way down, the correlation's low. So that's what we're seeing. We're seeing if you take a weighted average of all the implied volatilities of the components and divide them by the ETF, for example, that is quite high right now. So the volatility of the components are high versus the ETF. Well, if you have some stocks going up and some stocks going down, the ETF or the indexes aren't moving. And so that's one of the things that we're seeing. And another thing that I mentioned on a prior show is that in our back testing, one of the rules of thumbs that we see is that when the market at market extremes, the market doesn't go far enough. So what that means is when the volatility is low, they don't go low enough, and that's low enough relative to the realized volatility. So all of our forecasts right now in all the sectors are well below what the implied volatility is, except for, and then Mike mentioned it first, the financials. Our financials forecast of volatility is actually high. So I didn't notice it today, so I was interested in when Mike said that the XLF had a good move. So that's what we're looking at, the component ratio, and I think it's more of a stock picker's environment now. So I think that's an interesting thing to think about. And I learned something in the option block previously when if you look at the calculation of the VIX, it uses a lot of these really small puts, and those are still maintaining their premium and keeping the VIX up because the at the money is actually quite low. So those are the points I could add.
Those S&P/VIX puts, very contentious subject these days. A lot more data coming out about quote-unquote carpet bombing out there in VIX land. We'll have to get to that on a future show, though. Meanwhile, though, it is the first of the month, and it's so kind of them, so nice of our friends over there at OCC to oblige our recording schedule, putting out their numbers for May just in the nick of time for showtime. An interesting month out there in May. OCC, of course, the Options Clearing Corp. They pretty much take the other side of all of your options trades, reporting a pretty strong month for them, at least in May. A 19% increase from May of last year, a total of about 319.5 million contracts. OCC's year-to-date ADV is also up about 2% so far this year. It's about 17 million contracts a day. Of course, that's total. OCC clears a lot of stuff, not just listed options. So let's dig down a little bit. The options side of the fence, where we're interested, was also strong in May, about 366.5 million contracts. That's up 18% from May of last year. So all this hand-wringing at the OIC conference about where's the vol, where's the volume, there's no love for any of these products. You know what? May not turn out perhaps as bad as a lot of people thought. Overall, we're back on the green from a year-to-date perspective. The ADV for the year is up 1% now from last year, about 16.5 million contracts. We drill down a little bit further into the equity options. They were about 327 million contracts, up 17% from May of last year. Get a little further, ETF options, 134, nearly 135 million contracts, up 11% from May of last year. And rounding out the top there, index options, still where the lion's share of the love was, up 21%. from May of last year, nearly 40 million contracts. Also throw in a note about the futures. OCC also clears futures. You may say, what the heck is that? It's actually the VIX futures primarily out there, with a May was strong month for those as well, about 13.5 million contracts, 61% increase from May of last year. So all this hand-wringing, all the numbers are going to be down this year. There's no volume. There's no premium sellers. How do you lure people back to the business? At least so far, it doesn't seem to be the case. You know, Matt, you were down there with me at the OIC conference a few weeks ago. You heard a lot of this hand-wringing firsthand, as did I. What do you make of these numbers coming out of the OCC? Are you surprised to see that May was as robust as it was, despite the fact that a lot of the indicators were fairly anemic, or is this kind of what you expected?
I'd like to see what those numbers are without May 17th when the market went down and we had that big day. But yeah, when we were talking at the OIC, we were talking about how bifurcated the market is between, you know, just some of the biggest symbols and the rest of them. And, you know, unfortunately, I'm looking on my screens and seeing, you know, still wide markets. I hope they do something about those wide markets, but we're getting, I think a lot of that volume is in, you know, the SPX, and I think a lot of it happened when the market caved in that one day.
Yeah, you know, they don't really single out data points. It wouldn't surprise me to see that's exactly the case. But yeah, that's, you know, one or 2 days we've seen can make or break a month, and that's perhaps what we're seeing here. But still surprising. Uncle Mike, Mr. Rock Lobster, any thoughts on these numbers before we roll on into the odd block?
I'll steal Andrew's thunder. Options like a bull market.
You dog.
Well, you know, it's funny because you say that, and that is very much true. And yet on the other side, we also have, premium sellers like a little bit of juice, and a bull market does not usually equate to juice. So we have a whole half of the business, if not more, that usually is a little bit disenfranchised by these types of environments. And yet we're seeing good stuff here. So yeah, hopefully maybe this will be maybe this is the canary in the coal mine, or maybe it's too soon. We are in the sell in May and go away time frame, so we'll see how June and July and some of these traditionally, certainly August, the traditional dog days of summer hold up for us here. Meanwhile, though, let's keep on rolling. It's time for that rock'em sock'em portion of the show. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we usually break down some weird, wild, wonderful activity out there in the world of options. We're still going to do that. We're just going to mix it up a little bit. We're trying out some interesting new ideas here. And one of them we just launched on the site this morning. And as predicted, it got a lot of response. You guys have always hitting us up saying, hey, give us more data, talk more about Tesla. Either you hate it and you hate the stock and you want to you want to trade the puts, or you just love it. You got to load up on those calls, or you're somewhere in between. Either way, people want to talk about this name. So we got you covered. We launched our inaugural version of the Tesla Options Tracker this afternoon, and it was interesting stuff out there. We kind of just trying to give you a nice little snapshot of some of these names you guys like to watch on a regular basis. Tesla is certainly lighting up the top 10 for us quite a bit. So you guys need more content on this name, and trying to make it really easily digestible, very quick format. You look at it, a nice little overview of what's hot, what's popping, what's going on out there. And today's version of it, when we ran it the first time and they handed it to me, I looked at it and I thought, this does not seem right. Let me go back and check it myself. So I did, and I went back and I looked at the numbers, and I was very surprised at what we turned up here in our inaugural Tesla tracker. I usually wait till later in the show, the mail block, before I ask you guys for some questions and ask you guys, my co-hosts, to weigh in. Hopefully you weren't following us on social media today, because we actually did tweet out the answer earlier. But this one surprised me. Seemingly from your responses, this surprised the hell out of you guys a lot too. So I'm going to ask each of you guys. It's hard to guess the exact strike. Let's just see if you can guess the month. What month do you feel? We were breaking down the top open interest positions in Tesla right now. What month do you think is the? And then if you want to go put or call, and if you want to be even more daring, you want to guess a strike, I'll let you have it. So you have 3 options for guessing. Matt, you're our guest, so I guess you get the pride of place to go first. Maybe it's a dubious honor. I don't know. What month? What call or put, and if you're feeling daring, what strike do you think is the top open interest position right now in Tesla?
Well, how about this? I'll tell you that I cheated and looked it up. I'll tell you the second place. I'll tell you the second place put. The second place put is the January 19, 2018, like I said, a put of 100, and Tesla's 340 right now. So that might give the audience that's waiting at home for the answer a little clue.
You cheated. I told the Rock Lobster, I said, don't look. It's going to surprise me when I ask you on the show. I should have told you as well. I had a feeling you're a data guy. You couldn't resist looking at the data. So it's still got to guess number 1. Mr. Uncle Mike, what are you feeling, sir? How brave are you feeling today?
Not very, because I would not have guessed anything that far out for second place.
Exactly my point.
All right. Well, I will go with, I'll go with what I would have gone with, even though the second place answer kind of is totally going against what I would have gone with. I'll go with 340, and let's go with July.
A very sensible choice, sir. Very sensible. What I expect from you, a sensible choice from Uncle Mike Tusa. Can't fault that at all. Mr. Rock Lobster, take it home. If you didn't cheat, and you don't follow social media that much, so I'm guessing you didn't cheat. What do you feel? How brave are you going to go guess all 3, or what are you going to guess for us?
Before I heard any hint, I'm going to stick with my initial guess, and I'm just going Crazy Town. My initial guess was the July ordinary 400 calls.
You might think that is the Crazy Town, and that could potentially be considered Crazy Town, but I guarantee you the actual answer is far more Crazy Town. This is why I had to go look it up a couple of times myself. I was like, wait a minute, this is not right. Somehow we entered in the wrong date or something like that. No, the actual number 1 with a bullet, by far, open interest position out there in Tesla land. It's not as big as I thought it would be either. You think Tesla, you're thinking hundreds of thousands of contracts a day. You think the largest number 1 strike would be easily maybe 100,000 contracts. Nope. It's 26,460, and it's the January 2019 50 put.
The 50s.
50 put. Let that marinate for a little bit.
2019.
Yes. So it's all the way out to 2019. And the 50 put, just let that sink in for a second. What the F is going on out there is the question. That's actually the question a lot of you guys had as well when we put this out there. I'll just bump some of these up from the mailbag because it's so relevant now. Jimmy Urio saying, that's actually fascinating. We thought so too. Do you know when that was put on? So that was our next thought. We said, this is probably a lot of size open interest from maybe back, I don't know, IPO days, and it's just languishing there out of the money. No, these things are actually surprisingly active for a ridiculously out of the money put. They've actually added a substantial amount of open interest just in the past few months. Some days doing, like they traded 22 more today of these things, and they continue to pile in. There was only about 10,000 less contracts open just a few months ago, and they've slowly 50, 100, couple hundred a day over the last few months. Someone's been slowly piling into these things to the tune of $1 and change for quite some time. So very, very weird stuff. Poor homie Sonny saying it's probably a hedge against a substantial position in Tesla. Yeah, if that's your idea of a hedge, I might have to have a conversation about what the term hedge means, because that doesn't, to me, that's not a very useful hedge. You're getting down there. That's like that's more of a catastrophe put for me. That's more in line with what one of our listeners is asking about later in the mail block about some catastrophe type puts. Love, these handles are great. Love Baggies says, if anyone thought the stock could sink that low, why would you want to own it? Insane. Pretty much the only way these would pay is if the stock goes broke. Should find support around 50 to 100 when this crashes. And then Cam Doc saying, Google should just buy Tesla and GM and rule the world. I can't disagree with all of that out there. Matt, I know you're a data guy, so this is obviously something that's probably very intriguing to you. A, what do you make of these? And then B, what are your thoughts here on the madness that is Tesla options in general?
Well, we draw a smooth skew through every option, every second, every day of everything. And one of the biggest outliers are these options. They shouldn't even be, if you draw a rational, smooth line through it, it's about worth about a quarter, and they're trading $1.25. They're trading about almost an 80 volatility with the month trading a 40 volatility. I mean, this is someone I remember trading back with Andrew. We had a similar thing happen, and it actually the stock went there. They were buying, I think it was a $20 stock, and they were buying the 2.5s, and it eventually went bankrupt. So I think that's a bankruptcy play. That's my guess.
Yeah, all these people, we see so many haters on this name. It's got tons of short open interest. You got lovers as well. The call zealots are certainly represented out there in the skew, but this one just leapt off the page at us and just about everybody who saw it. I don't think anyone in their right mind. I was like Tusa. I was probably guessing June, July, probably some near out of the money call. And no, not even close. It's crazy town. Just for the record, the other four. So Matt gave us number 2. It was the Jan 2018 100 puts, seemingly sensible by comparison. About 17,000 open to those. Then the Jan 2018 50 puts. So also maybe some calendar love going on there for 14,000 and change. Then the Jan 200 puts, about 14,000. And then first call on the list is number 5, the June 320. So there are some saner heads prevailing perhaps out there, but still just absolute crazy town. Mr. Rock Lobster, what does this one make of you? You have to put this one out in your pit chat tomorrow and see what your crazies think of this.
Well, first off, our pit chat, there's no crazies in there. Well, I'm in there.
Excuse me, the hardcores.
Because we're both in there, so that by definition means there's crazies in there. It's almost like everybody is getting out of all the old automotives and into Tesla. Like GM sucks, Ford sucks. They all suck because they're making big internal combustion engines, which nobody's going to buy in 5 years. And Tesla seems to be priced that way. When the next big oil shock comes, or everybody just puts a solar panel on their house and they just plug their car in, which I know a lot of environmentalists would love to death, except how are we going to make all those batteries? I haven't quite figured that out yet. But that being said, there is the opinion in Tesla is so strong in both directions. And you're going to see stuff like this. So, like Matt said, we have seen crazy before, and as we have seen on this show, sometimes crazy has a way of becoming reality. But you might see 600 before you see 50.
Yeah, I'm so glad we created this tracker thing, because I'm very interested to see how this changes and grows now, because this is not at all what I expected to see from the data. I'm looking forward to crunching these numbers a little bit more. I got a feeling these puts are going to hang around for a while and in the top spot because someone out there, maybe someone bought a ton of Model S's and they're just hedging catastrophe. I'm teasing the listener mail question we got a little bit later. I don't want to give up the ghost on that one too much yet. You guys put Tesla out, and they come in spades to nibble and argue and debate and all sorts of fun stuff, which is interesting. Excuse me, we'll have a little more of that in the listener mail question. I bumped a few of those up ahead of time because it was so crazy. That's certainly one of the odder of the odd block type names. It's not even a trade, it's just a general what the F out there that we noticed in the options market today. Definitely up there in our odd block registrar here for names and trades we've looked at. Let's keep on rolling, though, into another newcomer here on the old odd block. This is Taubman Centers, Inc., ticker symbol TCO. Closing today about 59.40, off about $1.75 or nearly 3%. So not a banner day here for good old Taubman. This is the name that does an odd block appropriate 278 contracts a day. Today, about 5,000 and change. So a banner day for them. 76-1 calls over puts. Yeah, of that 5,253 contracts, a whopping 68 were puts. All of the rest were calls. And you want to see where the lion's share of those calls went up? 5,164 went up on the SEP 70 line. Yeah, SEP 70 calls lighting it up, including two big blocks going up on the Philly, totaling about 4,737, going up on splits for about 72.5 cents. Now that's interesting. Looks like paper blasting out those bad boys, really hitting aggressively on that bid. I think they went up 70 and 75 cents, so blasting away at both of those bids. It does appear to be closing. Does have the whiff of it because about 7,400 and change are open on the strike, and this has all the looks of someone who was swinging for the fences out here, or at least swinging for a nice base hit, and then now is sadly giving up the ghost. Today's shellacking of the stock was perhaps the final nail in his coffin. We did do a little digging on when that open interest popped up, and it actually looks like someone purchased nearly 7,000 of these back not even a month ago. It's a few weeks ago, May 24th for $1.45. So someone was clearly feeling the love here for TCO on a nice upside run, and doesn't look like that really came to be. Seems like they're getting the heck out of Dodge with about a 50% loss. So getting the heck out of Dodge, getting while the getting is not good, but at least not as bad as it could be, and trying to salvage, a little bit left of that position. And looking here at the chart for the past year or so out here in TCO, has been an interesting ride. You can maybe see why our friend here was lulled into getting a little bit upside love here. This thing hit as high of nearly 82 back almost a year ago, July of last year, and it's kind of been vacillating in that 80 to a mid-70s range for quite some time. The last few months, though, it's kind of been trending on the dark side, hitting a low of about 57.5 or so not that long ago. So our friend was specking on a retracement to the upside. Doesn't appear he's feeling the love. Mr. Rock Lobster, any thoughts here on our friend getting effectively clipped in half here in TCO?
You know, I look at a thing like TCO, and don't they own retail space, Taubman Center? I think they do, right? They are.
It's another REIT. It's another REIT.
Yeah, and they're global, whatever, but I think they're just suffering. I think they're getting Amazon a little bit. I think that's kind of the deal, and they're just. It's hard for. I think it's just hard for those brick and mortar companies, with a lot of the retailers just struggling against Amazon. And I think just Taubman Centers is kind of feeling the pain. I mean, in a market that's at all-time highs, TCO is getting smoked. It's just not there's no pretty picture for that unless, Amazon starts buying fulfillment centers in these shopping centers. That's all I can say on that one. It's not an area that I would want to touch. I think it's got a ways to go in the into the basement, I have a feeling.
Yeah, getting Amazon. We're hearing that a lot lately, except for apparently Best Buy. Best Buy, the lone spark, and I think Costco, the two lone sparks of life out there in the retail sector, and clearly the REIT side of it being, perhaps to coin a verb of the Rock Lobsters, Amazon as well. Interesting stuff out here. Very interesting in those Tesla puts. Very funky stuff, though. Meanwhile, let's keep on rolling. It's Thursday. It means it's time for Uncle Mike to come on down from the mountain. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block. Of course, the portion of the show where Uncle Mike holds court for about 20-odd minutes on the topic of his choosing. He hinted at the top of the show something out in S&P land. He, like many of you, giving up the ghost on that SLV collar. It's just not a lot of action out there, listeners. You can't really, once you put it on for 2 years, not a lot going on out there. But thankfully, he's got something else that he may be able to adjust with a wee bit more frequency. Uncle Mike, sir, have at it. The floor is yours.
Hey, I'm not giving up on my SLV collar by gosh. We might still get some strategy block time on it, but in the meantime, it's making money, so we can't really complain on it too much. But anyway, Something that is definitely getting a lot of adjustments from me in the last couple of weeks is the SPY diagonal spread that I talked about on the show last week. Just to kind of give everybody a review, going into last week, we actually, on Monday, bought a call option, the August 232 call on SPY. It was a 70 delta call, and we had a little bit of time decay in it, obviously. And so as a way of mitigating time decay against it, what we wanted to do was sell some calls against it. But with the bullishness with which I have with this market right now, and combine that with the VIX being at a lower level, my opinion, I suppose it could go down to 6 or 7, you never know, but my opinion is that we are at the lower end of the VIX range, which I'm willing to bet a lot of people would agree. I didn't want to just simply sell calls, because if we do have a raging bull market, in looking at the market, SPY was at 239.5 last Monday, on the 22nd. And so if we were to sell an option $1 out of the money, we'd get 32 cents for it. And if it blows past there, it really makes it hard to really make that worth your while for 32 cents if the S&P 500 moves roughly 10 points. So what we've been doing instead is selling call spreads. And we've been losing, but we've been losing much less with this than what we would have if we were just selling out of the money calls. And the market's been going higher to where it's the point to where these are joyous losses, so to speak, because overall the position's doing very well. So last week on Monday, we sold a weekly 239.5, 240.5 call spread against it for 48 cents. We ended up losing on that one, and we actually adjusted up from 240.5 to 241.5 on the long call side of it to kind of protect a little bit of downside, which I talked about last week on the show. So with that, we ended up losing on selling that short call, or that short call spread. Once again, I hope I lose every time on that, because that means that we're winning and doing very well on the long call. Now, here's the danger of selling just a straight diagonal spread without a call spread. In other words, let's say you're buying a longer-term call option and selling a near-term call option. One thing that I'm noticing, and that really kind of stuck out to me today as I'm looking at my deltas, is that if I were to have just held on to a short call option and not a call spread, meaning, let's say I were to just be long the 232 call for August and short the, what we did for this week, by the way, was the 241.5, 242.5 call spread. But if I didn't have that second call on, I'd have to be adjusting it. I'd have to be rolling it up and doing all these things to try and stay bullish. But if I did nothing, I'd technically be negative deltas right now. And if you're negative deltas, when you're bullish, you're not being a very good option trader, quite frankly. So the other benefit of this trade is that right now, going into this week, we're still long the 232 call for August, and we sold the 241.5, 242.5 call spread. We did that on Friday, actually, after we closed out last week's positions for a loss. So we sold this other call spread, and by doing that, we took in 52 cents on it. And then because of the fact that we have this 242.5 long call in, we're selling a call spread instead of a short call option. That gives us the ability to handle the bull market. We don't have to sell out of the money calls for next to nothing in premium. We were able to take in, I believe it was 52 cents this week on the short call spread. We have unlimited upside, and if the market does stay still or go down, we have a little bit of working in our favor from the short call spread. It's not going to be near as good as, obviously, if you sold a call option if the market were to stay the same or go down. But with option trading, you have to kind of, it's give and take. In some areas, you're going to give, some areas you're going to take. And I really believe in this market, a way with which for a premium seller to benefit. If you are a covered call trader, you can sell a call spread. If you're a diagonal spreader like what I'm doing right now, you can sell a call spread instead of just a short call. I really think that that's a way with which you can have some of the short-term income on it and make it so you're looking at it to where it's like, okay, if the market stays the same, I'm in good shape. If the market goes down, I still get a little bit of money from the short premium I sold. But if the market goes higher, I don't have to worry about rolling up an out-of-the-money call option that I sold for 22 cents. So I really believe right now that's a good thing to look at if you're typically a covered call trader or typically a diagonal spreader, and you want to collect some premium in this marketplace. Now, one thing I did do earlier in this week, actually yesterday, we had a down day yesterday in the markets. And so I actually saw an opportunity to where I took in 52 cents initially for this 241 half, 242 half call spread. $1 is the difference between strikes. So you're risking 48 cents to potentially make 52 cents if you're going by the expiration day risk graphs. And so with the market being down, I saw an opportunity to roll the 242 half call down to the 242 call for a debit of 10 cents. So I'm thinking, okay, well, let's say the market stays down, then my overall credit for the week would go from 52 cents to 42 cents. But if the market shoots back up again, and we do have some upside, then now I have unlimited upside 50 cents earlier. So I really felt that the risk reward made a lot of sense in that case, so I did it. Of course, this morning the markets came up again, and so what I was able to do this morning, I didn't do it right at the top of the market, unfortunately, but we were able to get back in. I got back out of the 242 call, sold that, and then bought the 242 half call again. So by doing that and doing that little maneuver, I was able to gain approximately 15 cents on the trade for the week, which isn't a ton of money. But now, instead of getting a 52-cent credit going into the week for this call spread, it's the equivalent of getting a 67-cent credit going into the week with the same risk reward. Now, obviously, that could have gone the other way, but this was one of those situations to where, with volatility going as low as it was, I really felt that the roll down of the long call made a lot of sense at the time. And I don't necessarily look at things saying, well, the stochastics are saying this and the support's here, resistance is here. I like looking at things to where I'm like, okay, and looking at the option skews on this and looking at what the prices are, if nothing happens and I'm totally wrong on this adjustment, it's not going to hurt that bad. But if I'm right, it's going to be very beneficial. And so that's what helped me to determine how to make the decision on doing that roll. So with that being said, the message for today is if you're a premium seller and you're not getting the premium you want from selling out of the money calls, I would look to go more closer to being at the money, but do a call spread. So that way you have some upside and it can be worth your while. And that's the strategy block for the 1st of June, 2017.
All right. So we got a little bit of time, so let's hit a really quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys hit us up, questions, comments, insights, hilarity, all that fun stuff. We occasionally ask you guys a question or two as well, like we did this week yet again. We asked you... We said earlier this week, Amazon broke the magical 1,000 level. All eyes were on Google to see if they could do the same. So back a few days ago when we posted this, we said the Google 1,000 call expiring tomorrow, this Friday, was trading about $4. The 1,000 put was trading about $8. Give you some hint of where Google was trading at the time. So what do you want to do? What would you trade for this week? Would you sell that par call, that 1,000 call, for $4? Would you buy it for $4? Would you just turn around and blast away that straddle take that $12 and run? Or would you sell the put for $8? Mr. Rock Lobster, we shall start with you. What is your vote, and what do you think is winning our poll? This is the portion of the show where Andrew forgets to unmute himself. It happens once a week, like clockwork, sometime once a show, like clockwork. Are you there, sir?
Consistent.
He is consistent in his lack of unmuting. That's true. There he is. It's a big red button. You hit it. It's amazing how that works.
I try to just keep quiet because there's so much great talk around. This is what I would do, though. I am looking for Amazon for next week. Oh, God, this is such a hard one. I'm going to say I like buying the par call for $4, and the reason being when it rips through $4, it's just going – it rips through 1,000, it's just going to rip. So I think the dollars are in the calls for the risk reward.
Well, of course, we're talking Google. Amazon was the one that broke 1,000. Google's coming next, but it's a similar analysis. The prices are very close. Matt, since you've been paying attention and you know how to hit your mute button, what is your vote, and what do you think is winning our poll?
Oh, well, when I first saw this, I thought, well, you got to sell the call for $4. But then I started thinking, what is $4 divided by 1,000? So then I switched my. I'd rather buy that call for $4 and like Andrew said, just sit and wait for it just to rip on through. So I'm buying that call for $4. I think I don't know. I'm a newcomer here, but I think people are going to sell the put for $8.
Interesting. Yeah, of course, Google have an interesting week this week. Uncle Mike, take us home. What is your vote, and what do you think is winning the poll, sir?
Honoring the late, great Jesse Livermore. I'm going to buy the call, and I think our audience will do the same. Jesse Livermore always said whenever a stock goes up to 100, it typically goes up a lot more right afterwards, and the same would be true for 1,000. So, and so to honor remnants of a stock operator, arguably the best trading book of all time, I'm going to buy those calls.
All right, well, a lot of people are agreeing with you guys. At least they were earlier in the week. 41% still leaning towards buying that 1,000 call for $4. By the way, listeners, it hasn't been the best week if you did take that route, because those 1,000 calls trading a whopping 20 cents right now. So not looking too good on the call front. Of course, Google selling off, I should say Alphabet selling off a wee bit, 988 and change right now. Number 2 is selling the Straddle for about $12, 22%. Number 3, selling the par call for $4, 20%. That one looking pretty good, as we just said. And number 4, selling the 1,000 put for $8. Let's see where those are about 11. That's about 12 and change. Actually, they're 11.40 at 14.40. A wee bit wide, but that one not looking quite as good. You got another day left or so. If you haven't voted, it's weird how these things shake up, though, because I thought VIX did nothing but erode last week, and we saw more people piling into our poll last week where we asked them what they wanted to do on VIX, and more people wanted to buy the 13 call at the end of the week than at the beginning of the week, even though it was farther out of the money. So go figure what people are doing in these polls. Let's see if we got time for one quick one. You know, we got really quick one here. Mr. Rocklobster, this is going for you. Question comes from GuruHawk. He says, how do you know, he's talking about our unusual activity. He says, how do we know the shares were traded, were purchased as well? I see the volume on the options, but how do I know what's going on with the stock, and how do I figure out the intent there? So walk them through what you do, how you find, when we talk about things go up tide, how you find the stock and how you reasonably intuit some intent there, sir.
I really hope I'm not muted right now.
You are not.
Can you hear me?
I can hear you, yes.
You know, how many of these shows have I done? 400?
Something like that.
Have I done 400?
You think you'd master that one big red button that's your only control that's in front of you?
Oh, my word. Anyway, now that I'm back to the land, so there's a couple things. I use the LiveVol platform for this particular thing, and it does show you when the stock goes up, either when it's tied by buy right or if you see a tag buy right or spread. Normally, if you see a tag spread against options, but you don't see a countervailing side, the other part of the spread would be stock. Normally, also, stock goes up against options in two ways. It goes up 1-to-1, meaning one option contract per 100 shares, or it goes up delta neutral. So depending on if you sell calls or buy calls or sell puts or buy puts, there will be a countervailing side to balance the delta of the equation. Almost all, if the trade's not a buy right, let's say, where it's a straight sort of buy stock and sell call, it's going to go up delta neutral most of the time. Also, because of the rules, you have to put the stock up. Basically, so when options and stock transact, the trader will walk into the crowd, or it's still a crowd these days, or when they post the options, and they have to post it with a stock cross where the stock was trading at the time the trade was posted, for just the various exchange rules. You can trade through things as long as it's tied to a spread. and that's the reason. So you should see the volume go up usually within 2 to 3 minutes of when the option trade hits the tape, because usually they go print the options on the tape, meaning the ticker tape. I'm dating myself, going back to Jesse Livermore's time, and the stock will follow soon enough. So it's the ratio usually that tells you what's going on. How do I know all that stuff? Well, let's see. Matt would probably say the same thing. I don't know how many buy right stock crosses, matched pairs of things that we put up over the years. I don't know, thousands of them. And that's how they go. That's just the way the business is done. And that's where I intuit my what's going on. Now, the only other thing really is how the liquidity hits the tape. That's the second one, where the options are priced, about where the stock is. And, you used to have to quote buy rights, in your head in the old days. So I just look at that and I see about where that trade should be priced. If you're super clever, you can look at what the synthetic, you're not super clever, but if you just understand, usually that stuff, the synthetic option is priced somewhere around where the real option is trading. So that's just the way the paper goes up. But I would say the simple way would just look for a block of stock, either delta neutral or 1-to-1, within a couple minutes of the option block. Not this show, but the block that went up.
There you go. If only you had as much facility with the mute button as you do with putting up stock blocks. Or, what a guru you would be. Meanwhile, though, we got to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching for the rest of this week into the weekend. No truncated holiday week this week, at least not quite. So a little bit of fun stuff to watch. Tomorrow, the important news tomorrow, free donut day. Go out there, get your free donut. That's really the thing everyone's watching. Aside from that, Matt, what is catching your eye for the rest of this week into the weekend, sir?
I think it's interesting how the SPY June 16th is trading higher than the rest of the months around there. So I'm looking at what is going on, even the 14th and the 21st. So there's something on the 15th or 16th that's going to happen. I'm interested in watching that. And that's what I got my eye on.
There you go. I like it. Nice and succinct, to the point. Well done, sir. Uncle Mike, let's see if you can match that. What are you keeping an eye on for the rest of this week into the weekend, sir?
Market to the Paris thing. Also, we have non-farm tomorrow. So, and I will be awaiting with bated breath at 7:30 in the morning to see what happens tomorrow morning.
There you go. I think you broke up mostly, but you're talking about the Paris thing, so we'll keep an eye on that. I think someone's sucking up all the bandwidth in St. Charles. We'll have to get you out pretty quick before it's all gone. Mr. Rock Lobster, last but not least, what are you watching for the rest of the week into the weekend, sir?
I am watching How Low VIX Can Go. The blog today will be actually implied volatility of the downside puts went up today as the market rallied, which is always, like I said, it's it is the curve steepening, which is sometimes painful for risk reversal traders in the SPX, unless they're long a buttload of calls. So that is like, why? Why is that going up? It's a subject for my blog tonight at Option Pit. Also, can our tech rally continue to go? If you think about it, Apple's up 60% in a year. Google's up 35%. Amazon, who the heck knows? I think it's doubled in a year. So I remember when people used to think 500 was impossible. Oh, it's crazy. Now it's 1,000, and nobody it's 1,000. Everybody's happy. So again, I've been a Q bell ringer for a while. I'm not adding any. It's been a while since I've added any Q positions, and I'm not quite sure what to do with what I've got at this point. But I still think we could go higher, and that's basically the stuff we're looking at. It looks like this is a market that wants to keep going. Good employment numbers, and as crazy as Washington, D.C. is, the market likes it. So who knew?
Who knew indeed? But that music means we gotta get out of here for this show. What a great journey it's been. A lot of Tesla, a lot of crazy puts, a lot of other fun stuff, adjusting SPY verticals and calls and call spreads and all kinds of fun stuff. Rock Lobster forgetting to unmute himself. A lot of good stuff on the show. But before we go, one more time around the horn, let's start with our guest, give him pride of place. Matt, we touched on it at the top of the show. People here are interested in learning more about your back testing and what it is you guys do. Where should they go? What should they do?
Yeah, go to ORATS.com or write me directly, Matt, M-E-T-T, at ORATS.com. Thanks, Mark.
Oh, I see the problem, Mr. Rock Lobster. Your button's blue. That's why you can't see the mute button. If you can find your mute button to unmute yourself, what is coming down the pike in the land of the pit?
Hopefully I didn't mute myself. Come here for mentoring. Our mentoring class is Platinum Gold, individual mentoring, trade teaching by me. We do all that stuff. Educating. Also, our premium selling master class is going on currently. We just teach people how to trade options, and our clients seem to do pretty well. We have had clients for years. I think not because we're still teaching them stuff, just because they like the ideas we generate. But anyway, besides that, stop on over, say hi to Mark at OptionPit.com or Andrew at OptionPit.com, and there you go.
There you go. Check him out over there. He can give you his great webinar on how to buy Tesla Jan 2019 50 puts. You too can get in on the party, and also how to not mute or unmute yourself. I'm going to get him a nice big sticker that's a red sticker that says mute button, so he can slap it on his button so he knows exactly where it is at all times. And last but not least, Uncle Mike, take it home, sir. What's coming down the pike in the land of all things RCM Wealth Advisors?
Well, if you would like to trade through RCM Wealth Advisors at a mostly discounted rate, we have relationships with TD Ameritrade Interactive Brokers, as well as Trading Block / Money Block. Feel free to contact me at 312-212-3531. We provide advice, and at least at TD Ameritrade, it's 35 cents per contract with no ticket charge. Of course, we do charge a small fee, but for a lot of people, that small fee outweighs the ticket charge. So, is more beneficial than any ticket charge you would have. So you don't have to worry about paying $8 to close out a 20-cent option. Feel free to contact me.
There you go, listeners. It's a good deal. Take him up on it. On behalf of the Rock Lobster and Uncle Mike and Matt, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, whatever the heck it is you do to get to us. We love you guys, and we'll see you next week for more of The Option Block. The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.